checking in no bag, shopping when we land. Big FN bag of ball. Plead the fifth if I get caught, they talk. Came through dripping on them, I been saucing.
Yo, what is good, y'all? J-Trades here, back in a brand new video. And in today's video, I'll be going over a step-by-step 2024 trading plan layout that you guys can personally customize to your own liking and your trading style for you guys to succeed as a trader. Now, this is mainly for those that are genuinely wanting to take trading seriously to the next level, where you are looking to potentially go full-time as a trader like myself. Again, if you guys are really serious about this, I do have a course, the ETU course, down below, link in the description on the website. And also, I do have a free Discord where you guys can access many free resources that I do provide as well, and content. So feel free to check that out. But without further ado, let's jump straight into it. So today's video, I just want to go over a sample 2024 trading plan that you guys can create and customize to yourself, and I'm gonna share many ideas and implementations that I personally put in my own private system that I believe you guys definitely should look into. So first off, before we even get into this plan right here that I've made out for you guys, you first want to get Notion basically. So you want to just go online, Google Notion, create an account, and once you do have an account, you just want to go to this section which is private or whatever section you just want to create a new page. Okay, once you click add a new page, you're able to customize things like this: the logo, emoji, banner, and then you just add text right here. And you can just start messing around with Notion. If you guys need help with Notion, you guys can ask me in the Discord, or you guys can feel free to check out, there's tons of YouTube free resources, tutorials on how to navigate Notion. So but anyway, that's not the point of today's video. Today's point of video is I'm going to show you guys every section that you guys should be looking for, and the factors that you should be looking for, and rules you guys should be making for your trading system to make trading as systematic as possible, as well as mathematically have math and statistics on your side when you're trading. As traders, especially when you're full-time, you're looking at a huge, large sample size, okay, for accurate data. Now, when you're looking at a huge, large sample size like 4,000 plus trades, you should be looking at it statistically. You should be trading statistically with a statistical mindset in mind when you're placing trades, rather than trying to win every trade. That won't happen to any trader, no matter how good you are, okay? Me personally, I've backtested 4,000 plus trades on my multiple strategies that I've taught in the ETU course, as well as many other private things as well. And honestly, dude, 4,000 plus trades is a really big sample size. Okay, this is also across just 2023 mainly, mostly, but still, that's a lot of trades. I've tried many different variations, different risk management strategies, and have found the best system for myself. And personally, in my opinion, I am an intraday trader, like day trader. I wouldn't necessarily say scalper, but intraday for sure. So it really depends on your personality of who you are. Okay, if you're someone that's very impatient, definitely don't be a swing trader, because you have to hold positions most likely overnight when you're asleep, and many people cannot handle that. If you're someone like me that likes the fast profits, I could literally make $3,000 to $4,000 within 20 to 30 minutes max of my time, and then I'm done for a day. Okay, if you're someone like that and want to get into day trading, definitely check out the course. But I also have tons of free resources on my whole YouTube channel. I've gone through so many different implementations of strategies that you can use and implement in your own system and check out, and just learn a lot of free educational content. But nonetheless, here's my 2024 trading plan that I've made for you guys to check out and see what you guys prefer. I have my own private trading plan and system that I share in the course that I don't share to YouTube, just because that doesn't make sense, right? To give out free content that you'll pay for, right? So, but this is a sample rough outline of what you guys should be looking for. Okay, first off, for backtesting, you want to get a backtesting software. You can get TradingView Premium, which is, I believe, like 200 a month, or 200 a year, my bad, 200 a year, I believe, but I got them during the Black Friday sale, so there's that. Usually it's like 600 a year, so it depends what your budget is really. But for backtesting, I would highly recommend a software called FX Replay. I believe I do have an affiliate link down below with them, so you guys can check that out. Highly recommend using FX Replay. They do have a 7 to 14 day free trial that you can just sign up, and no charge at all. So that's a safe way if you guys really want to take in the effort and just spend a lot of time and dedication to creating your outline, creating your trading plan, and then you backtest that trading plan and see if you find any commonalities or similarities between your losers and winning trades. Okay, that's essentially how you win in this game. You want to look at it long term, and that's why you need data. Okay, you need an edge before you even go live trading. So once you have that backtested proven edge of profitability from, I would say at least, I would recommend 1,000 trades in at least 1 year of data, because month to month it will vary because price action is always different from month to month. Like for example, me, I do much better in quarter 3 and 4 than 1 and 2. Always profitable every month, I end green, but on average on Q3 and Q4, I know from my data that I make more money just because of the price action. It fits my strategy much better. But basically, essentially, once you do have your backtest data, you want to take a screenshot of that or a link to it as well in your trading plan. That way you have access to it instantly whenever you're looking through, or whenever you're going in drawdown, and when you're live trading, you can look through your data and see what's missing, what you're doing wrong. That's why active journaling is still crucially important, just like backtesting. Once you backtest, you will know your win rate percent, you will know your average risk reward ratio, and all these other factors right here that I highly recommend you guys put in your data. So win rate percent, you just want to put in your win rate percent, obviously from back testing, okay? Now live trading, there's emotional decisions you guys make, psychological decisions. Usually I would say within the first year, if you even break even your first 1 to 2 years, that is green for me. In my opinion, it's A+. Most traders lose a lot of money the first 1 to 2 years. But if you do have a mentor, someone that's done full-time trading, someone that's have shown improving profitability from time to time over a long span of time, you will definitely get profitable a lot faster, probably 10 times the speed, just because many traders that go into this industry, it is a low entry industry. So you can put in 10, 20 bucks, have no knowledge of trading and blow it, and you're considered a losing trader statistic. So again, getting a mentor, in my opinion, is super crucial if you really want to take this seriously and go full time with it, like me. But these are the data you want to look into. Win rate percent and average risk reward ratio are the two main things I'll say are most important to a trading system. This proves your profit factor and your expected value expectancy, which basically these two numbers show whether you're profitable or not. Okay, so win rate percent, let's say for example, I have this chart right here actually to show you guys right here. Win rate percent, what win rate you need to break even, not profitable, or become profitable, along with the risk to reward combination. So for example, if you have a 50% win rate and have a 1-to-1 risk reward, technically, mathematically speaking, you are break even. However, in the live markets, we have commission, spread, many other things that take away from that. So you would actually end up slightly red. So if you have a 50% win rate, you need a risk reward higher than 1-to-1 to be profitable in a live market. Just take that into consideration when you're backtesting, because it doesn't include spread. And then basically you can check out the other win rate combinations. Okay, other win rate combinations between the win rate percent and the profitability what's it called, the risk reward ratio that you need to basically break even, become profitable. We want to stay in this column right here. This is most ideal, the most right column, but again, it varies from your win rate and risk reward ratio. These are how these two things are correlated related. Next thing you want to look at is your drawdown. Okay, actually, before I get into drawdown, I want to say one thing. Win rate percent and average risk reward ratio technically are usually inverse proportional to each other. It's not always. You can have a high win rate with a high risk reward ratio, but it's very rare, and your trade frequency will most likely be very low, to the point where it's not even worth it, because your expected value over a long period of time is going to be a lot less trades. Therefore, you actually end up making less money than someone that has a worse win rate and worse risk reward ratio, but their trade setup occurs every single day. Okay, for example. So that's something you definitely want to take into consideration, which is your trade frequency as well. But next thing you want to take into consideration is drawdown. Max number of losing trades in a row. Over 1,000 trade sample size, I would say, is very valid as a reliable trading sample. And you want to see your max number of losing trades in a row. Just something you want to keep in the back of your mind when you're live trading, so you don't have to worry about the psychological aspect of live trading, because you're like, okay, from my data, my max drawdown is 7 trades in a row, losing 4 example. Okay, usually how it works is the higher your win rate, the less likely you will face a bigger drawdown. Here is a chart that actually shows it right here. Again, you guys can feel free to download this chart, these two charts, on my Discord free server. You guys can just download from there, or on my Twitter as well. You guys can check it out. Probability of seeing at least consecutive losing trades within a 50 trade period. Now, this is only 50 trade period. When I say 1,000 trade period, obviously you're gonna have potentially higher drawdown, higher number of losing trades in a row. Well, you guys can see how this is correlated. Okay, most people don't fall into 5 to 20% win rate. I would say, in my opinion, for win rate and risk reward ratio, I would not trade any trading strategy under 30% win rate. If it's under 30%, the drawdown is just too, the potential drawdown is just too big to be like, you know, trading. So in my opinion, I think it's just extremely hard psychologically for any trader to trade under 30%. So right here, as you can see, when you have a 30% win rate, your probability of hitting 10 trades in a row wrong is 70%, which is very high. And that's only within 50 trades. So you imagine 1,000 trades, that's a lot. But most people don't even take 1,000 trades in a year. Most people probably take around 200, I would say, assume. Me personally, I take about 300 to 400 trades per year. Again, does depend on my setup and what strategy I'm trading. But again, here is the percentages you guys can see based on the win rate. So if you have a 95% win rate, the odds of you losing 2 in a row is super low. So I don't know. I don't know really people with 95% win rate, I will say, with a good risk to reward of at least 1-to-1. So there's that. Something you want to take into consideration. Next thing is equity curve. You just have a picture of your equity curve. You just want to see basically if it's smooth, if it's a linear equity curve, or if it's sideways, consolidation, or it's just messy. If it's messy and very inconsistent, I would not trade that system. I would go find and backtest a different system or strategy. Honestly, it's just not worth it with a very unstable equity curve at all. Next thing, average number of losing trades streak or winning streak. For me, for example, let's just say, I'll give you guys an example. Let's say my average number of winning streak is 7 winning trades in a row. Average number of losing streak is 2 trades in a row. So that's something, an expectation I'll have and keep in mind when I'm live trading. So when I hit 2 trades in a row losing, I'll be completely fine. And I'm still risking the same percent and keeping everything mathematically speaking, because that is just how probabilities work. We want to look at trading as a probability game. Next thing you want to look at is average number of trades per day. This is just something I think that's also good to know by yourself, so you know when you're over trading or not. Let's say your average number of trades per day is 2, okay? Me personally, it's about 2 to 4. It depends on how many assets and setups I see, but on average 2 to 4 trades per day for me that are A+ setups. In these trades, I'll be like, if I ever take even 15 trades or even 10 trades in a day, I'm most likely over trading that day. So that's something psychologically you want to keep in mind. Some people even have a rule where they set a max number of trades they take per day. So it really depends on you and what you find best fits you when live trading. Average duration of winning and losing trades. This is super important to know in my opinion as well, just because, you know, it doesn't have a huge difference. But for me, for example, my average winning trade it takes for me to hit TP is usually 30 minutes. Average losing trade to hit stop loss about 5 to 6 minutes. So usually when I place a trade, this helps me stay calm, right? First 5 minutes of the trade, I'm not even really looking at the chart to be honest, okay? I'm just gonna go about my day, maybe do something else in the meantime real quick, figure something out, you know, do whatever for first 5 minutes of trade because I know this is when the trade is not gonna hit stop loss or TP during this time anyway, so keep it on. Again, this is average and median. This is not like there's some outliers of course in data. Of any type of data is always outliers. Some trades hit TP in 1 minute because of news or because of super good volatility that day, but typically that's my average duration. So that's something good to know for me. So usually when I place a trade, I don't look at it for the first 5 minutes, and then I would know usually if it's going towards TP, it will take about 30 minutes to hit. So usually, for example, let's say I'm risking 1K on a trade. My average risk reward for me personally is 4 to 5. Okay, so let's say I usually hit $5,000, make $5,000 within 30 minutes of opening a trade. That's on average. That's really a good statistic in my opinion for me to know personally. If I'm seeing a trade going on for 2 hours, I'm most likely just gonna close it or something else because that just clearly means there's some volatility issue going on. Okay, most times that does not happen though. You want to take into consideration also your average red day. This can be either be in percent, money, etc. In my opinion, I highly recommend going with percent or RR just because this is a lot more of a very consistent number you can look at. Money, I don't like to look at trading in terms of money, okay? Money is a byproduct of good trading. So I don't like to put in money in terms of things like this. So average red day, you just want to take into consideration, just roughly know this data, average green day as well. And then max red day is also super important. You want to know how much drawdown can you get in 1 day trading your setups. So let's say max red day within 1,000 trades is down 4%, so down 4K. That's my max red day. So if I'm ever in a trade on a single day down 8%, there's not even 8%, maybe at the 6% mark, there's something wrong with me, okay? Something wrong with my psychology. Something's going on that day where I'm making emotional mistake. Unless it's really bad price action, then I tend to just stay away. So that's the max red day. Definitely want to look into that as well. And then last but not least, something just know, percent of trading days that end green and red. Just to see your calendar, when you look at your calendar, does this match my backtesting results or not? In fact, what I like to do sometimes is at the end of every month, I end green every single month when I'm trading. Especially my backtest, I usually do better in quarter 3 and 4 than quarter 1 and 2. This is data that you just want to take into consideration in the back of your head. But again, trading days that end green, I like to just go back in time for that month, previous month that will end green, and just compare my live results with back testing that month again and seeing if I was doing everything correct. If I was, that's good. If I made some mistakes, that's okay. You can learn from them, but you try not to make as many mistakes as possible and you want to end the month green. Okay, I don't like any trading system that has a red month. I know some people are like, trading, yes, will have red months, red weeks, red days. In my opinion, red days are completely normal. Red weeks, I would say iffy, but complete. It could be normal. Okay. Red month though is a big enough trading sample in my opinion where if your system gives you a red month, I wouldn't really trust it that much unless your other months are really positive, like you have huge winning months. Otherwise, it's a little suspicious. Okay. Something you want to look into when you're backtesting and finding the best consistent strategy. Now, we are going to be moving on to trading rules. So right here, I have a trading rule for myself right here. 8:30 a.m. to 11:30 a.m. and I journal from 11:30 a.m. or 11:30 a.m. to 12 p.m. Yeah. So that's my trading window. I only take trades within this window. I'm not taking trades outside this window because volatility is lower, volume is lower, spread increases, which ruins your risk to reward ratio. And setups, they don't move as much. I'm a mean reversion trader. Mostly I do have setups that are continuation, but most of my trading strategy is based on playing reversals, and reversals don't happen as much during or after 11:30 a.m. when the volatility dies, after lunch hours and during lunch hours. Okay. So I tend to stay away from trading during this time because it's just a lot harder to catch these reversals. And then next is I talk about the time frames I'm using. So these are 3 time frames I'm using: 1 minute, 5 minute, 1 hour. I tend to like to stick to 3 time frames. I would say 3 to 5 time frames max. 5 is a little too much, but I'm recently implementing 30 seconds also, like the seconds time frame for my entries. So I enter on 30 seconds in 1 minute, and then I draw my point of interest and stuff on 1 minute and 5 minute, and an hour is basically my trend. And then sometimes I do use dailies, so you can say I use 5 time frames. But nonetheless, for each time frame, it must serve a purpose. Especially when backtesting, you want to backtest these time frames and how much they make a difference. Okay, you don't want to be live trading testing necessarily. I say that's good to live forward test, but I would say backtesting definitely helps you get a bigger, more accurate sample size in the long run. But yeah, 5 time frames maximum. I don't go over 5 time frames just because there's such thing as analysis paralysis and over analyzing, and that is not good. So these are my time frames. Each time frame you must know what the purpose is. So these are my high time frames. These are my areas of interest, entry. Now this will vary depending on your swing or not. So this depends on your trading strategy or style. Next is assets. You want to list what you're trading. Okay. I would recommend if you are starting out your first year of trading, second year of trading, I would say you don't have to do this anymore. But first year of trading, especially when you're still learning, stick to one asset. Just stick to one. You don't need to be looking at 5 to 10 different charts at the same time. There's no point in that. Okay. It's also hard to keep consistency when you're trading too many assets at a time because of the distribution of each asset. Some strategies work better on certain assets. I won't lie, that's a real thing. I've backtested this before myself and seen the results. Some assets do need work better with certain strategies. So that's something you definitely want to backtest, look into, and find the ones that work best for you as well as your time. Because my window is 8:30 a.m. to 11:30 a.m. This is in your session, right? So for me, all these pairs usually work because they are USD correlated pairs. But if I was trading something like I don't know, AUD CAD or whatever, that's not really gonna move much, I believe, during your sessions, so I don't include that. So you definitely want to take into volatility into consideration when picking your assets. But again, stick to one, and then later on when you get more complex and advanced and know what you're doing, you have proven record of profitability, you can add on a few more assets later on. What I'd like to do, and the reason why I add a few more assets later on, is because it gives me more opportunities. You know, in a trading system, as long as you have batches data that on all these assets I'm profitable month to month, then there's no problem trading them all at the same time, right? There's really no problem. I've seen people that just say they only trade one thing. I think that depends on the person. Me personally, I'm trying to maximize the most I can make my expected value. And if the stats for each asset are very similar, mathematically speaking, like objectively, you will make more money taking more trades that are aligned with your setup. You're just taking more trades within the same time window, okay? So increasing trade frequency, not taking random trades, not FOMOing, things like that, or revenge trading, but taking trades within your setup. The more setups you have that occur, you will make more money in the long run, and you also will have a bigger sample size where you basically, I would say, yes, you can get into more drawdown because of bigger sample size, but also you could say same thing with profit, right? So for me, what I like to do, this is just my personal experience. I trade these three mainly, New York Session, and then SPY, I trade option contracts for that. These are Forex, and then USD JPY, I mainly trade just during Asia session if I really feel like it. I don't always trade it just because sometimes I don't feel like it. I feel like end of the day, I end green, I'm done for the day, right? But there are the times where I'm just like, okay, this is really a good setup. I'll take it during Asia session. That's about it. Mostly New York session only. Max drawdown per day. This is also super important. You need to set this rule. This is crucial. You can set it as percent or RR like I mentioned. If you're taking a prop firm challenge, most prop firms have a max drawdown 5% per day. So you want to have a drawdown that you find best that fits you based on your back testing. For me personally, for example, my drawdown max per day would be 4%. I know that's really high for a lot of people, but it's because I have proven results of my system that I teach in strategy just outperforming every single month. So I know even with a 4% draw in a single day, I will make it back within that week and go in profit most of the times. So that is not a problem for me, but again, this depends. If you're a beginner, I would recommend reducing this drawdown so you get used to trading and then later on take higher risk. But me personally, that's my risk. And again, this depends, right? If you're risking 1% per trade, that'll be 4 trades max losses in a row. If you're risking 0.5%, that'll be 8 max losses in a row. So I like to look at it in terms of RR or percent rather than number of trades in a row, because number of trades in a row really depends on how much you're risking per trade, right? Like we mentioned above, I have it here. Do I have it here? I have it down here. Okay, yeah, perfect. So yeah, that's max drawdown per day. That's really good. And last but not least, max number of trades in a single direction. I find this helping a lot with revenge trading, especially for reversals and trading reversals. It's like if I'm wrong on the first 2 or 3 trades, I'm done for the day in terms of that direction, right? I'm not going to try catching a falling knife or going against a trend too often. Let's say if it's trend day, there are 1 out of 10 trading days typically are trend days where it just continues going up or down in one direction. And those days will kill you if you keep on trying to play a reversal, okay? So therefore, I typically limit myself to 2 trades max per direction, sometimes 3, but most of the times I have a strict 2 trades max per direction before I look for, let's say I'm going short, right? Let's stop that first one. It's okay. I go short again with obviously a proper setup happening again. Okay, proper entry model happening again. I'm not just going randomly short right after. That's just stupid. That's not part of your trading plan. I'm taking trading plans within my setups. If I get stop loss on the second short, then I'm basically done for shorting. I'm gonna look for longs or I'm just done for the day, right? But what happened is you have to find this from your data, okay? I have different trading strategies and systems that I teach in a course, and each system will have a different rule for this. So it really depends on your data, okay? A lot of things are very personal when it comes to trading. You wanna maximize and optimize your system to you, and not only your personality, your psychology, but also just objective data. You want to look at data from a trading perspective. So for example, some of my strategies, I only have 1 trade max per direction rule because I know a second trade almost never wins, okay? But there are certain setups I have where the second trade 80% of times wins after the first one gets stopped out. And there are times where the first one is his winner, so I'm not going to skip the first entry, right? So just take every setup that presents itself and stick to your rules, and that will create a lot of consistency. Last but not least, risk management strategy. This is very straightforward, but you want to find out how you want to manage your trades and your risk. Me personally, I risk consistent 1% per trade no matter what. Even if I'm in drawdown, I'm risking 1% the whole way, because if you keep on reducing your risk, I see some people, what they do, and YouTubers teach is, on other courses as well, is keep reducing their risk. If they lose the first trade, they're reducing the risk to 0.75, lose that one route to 0.2, 0.5. But then you have to realize that's not helping you statistically in the long run, right? Let's say your win risk reward is 2. Okay, if your third trade is your winner, your risk reward 2 ends up with a 1% profit rather than a 2% profit because you're risking 0.5%. That messes up and skews your data, okay? Especially if you have a low win rate and high risk reward, it's hard to be profitable if you keep on changing your risk percent. So I highly recommend keeping it consistent throughout the whole thing. Unless you're in major drawdown, which rarely would occur. But if it does occur, then you might think about potentially reducing your risk. But most times I stick to 1% per trade. Even if I'm up in profit, I'm not risking my profit, okay? I'm just risking 1%, keeping math on my side. Break even at whatever point you want, risk reward ratio, whatever you guys want, and set and forget. These are things that are optional and things you should backtest and see what has the best expectancy. These are things that we'll talk about in my course as well, finding, telling you guys what is most optimal for many different types of trading strategies. Last but not least, I just have a section for additional notes on each strategy. This is just a template I made for this video specifically. I do have my own personal private template that I have for all these specific numbers that I personally have for my systems that I teach. But again, this is just a template I would highly recommend you guys create, and I do think it is very crucial to the success of a trader in the long run if I really want to become long term. And you honestly, dude, trading is one of those skills that are a lifetime sticks with you. You're not gonna get laid off, for example, like jobs, and the ceiling is like unlimited in a sense. You can literally scale up your trading account, compounded, dude. Compound interest, especially if you go and look online, compound interest calculators. Compounding is real, okay? Compounding is one of the 8 powers of wealth. So something you definitely want to take into mind, and continually, once you build a habit of sticking to these rules, you don't even have to have it written out at that point. Sometimes this really comes natural to me. I just know my rules. It's ingrained in my brain. So again, thank you guys so much for watching. If you guys have any questions, please let me know. Hit me up on Discord if you guys need any help or anything like that. Check out the course, check out the FX replay, check out everything I have linked down below if you guys need any resources and help, and I'll see you guys in the next one. Peace.